Hey traders, in this episode we're going to be talking about and discussing how to enter and exit your trades with precision and accuracy. It doesn't have to be complicated, guys. Before you go out there and buy that $4,000 AI trading bot, just watch my video and see how easy it is. All right, let's go. All right, traders. Before we get into it, just want to make a few disclaimers that this is only for training and entertainment purposes only, and this is not financial advice. All right, so we're on the U.S. E-mini 500 or the ES E-mini futures, and we have in front of us the 30-minute chart on the left-hand side, and also on the right-hand side we have the 5-minute chart. So I want to point your attention to these particular moving averages. They're not just any random moving averages. These are special and unique moving averages. Now, the first one is the 8-period EMA. Now, the 8-period EMA is this red line in this area, and also the 20-period moving average, which is the blue line that comes up and goes across like this. Now, as you can see, price respects the heck out of the 8-period EMA and the 200-period moving average and the 20-period moving average. Now, the 200 is the white line right here on the 30-minute chart. And as you can see on the right hand side is the same thing. We have the 20, the 8-period EMA, and the 200 moving average, this line right here. Now, what we do before we enter any trades, what we do, guys, is we will look at the higher time frames and see what exactly is going on from a bird's eye point of view, or for that matter, an eagle's eye point of view, right? Because we want to see the overall picture of what's going on. All right, so the first thing, usually before I enter in a trade, I want to see a few things, right? First of all, I'll go to my economic calendar. Now, this could be on any website, right? Right now, I'm looking on TradingView and investing.com for the economic calendar. Now, it is free, doesn't cost you anything. So what I'll do normally is go over to filters, and I will scroll down to where you see the 2 stars and the 3 stars, right? And then I'll click apply, and that will filter out any of the non-pertinent news. So what I'll do, I'll go down, up and down this calendar, and look for those time where there's going to be any major news that will affect when I trade during those times. So that so I'll know ahead of time that yes, there's going to be some volatility, and yes, there's going to be some interruption in my trades. So I will look at those time periods and try to avoid them the best I can. And then the second thing I'll do is go over to my charts. I'll go to the weekly, see how the markets were in the past a couple of weeks. So each bar equals 1 week. I'll go down to the daily and check the relationship between the 20-period moving average and the 8-period EMA. And as we can see in this position right here, in this position, we see that okay, there is some bullish sentiment. We see on the weekly chart, on the daily chart, that okay, price has traded above the 8-period EMA. All right, so that means that there's going to be some bullish momentum to the upside. Even though the 200-period moving average on the daily is telling you, okay, yes, there is some bullish sentiment. However, we're still a negative. We're still in a negative territory in relation to the 200 period moving average, right? So what we'll do, we'll go down to the 4 hour chart. All right. So as we can see, as far as the 4 hour chart is concerned, we are trading above the 8 period EMA. All right. So we're still considered bullish in terms of our position compared to the 20 period moving average. However, same scenario. We see that the 200 period moving average is above price action. So this tells us that our overall sentiment is still to the downside, even though we have some strong move to the upside. We still have to look out above and realize that, okay, the overall sentiment is still to the downside. All right, so we'll go down to the 2 hour chart, see how that looks. And as we can see, now the scenario is slightly different on the left hand side here. As we can see, price action on the 2 hour chart, where each bar equals 2 hours, is trading above its 8 period EMA and the 20 period moving average, right? And also above the 200 moving average, which is the granddaddy of all the moving averages. All right, so we have a quick synopsis of what's going on. So we saw how the market was at a bird's eye view, and also we zoomed in just to see how it is at the daily, the 4 hour chart, and also the 2 hour chart. So the next step is to go to the 30-minute chart. And what I'll do, guys, sometimes I'll go back and forth. I will look at the 45-minute chart, and I'll sometimes go to the 1 hour chart. So I just want to get some idea of the sentiment on the lower time frames. All right, so as we can see on the 1 hour chart, we have a bearish candle, which is looking like it's going to be a elephant bar, because it is a pretty strong move, as we can see. So now we're trading below the 8 period EMA, and we are trading below the 20 period moving average, right? So this tells me that there is some force or some selling pressure to the downside. Now, as an added confirmation, what I'll do is look at our trusty CCI. Now, the CCI, again, guys, this is not the RSI. CCI is what you might say, it's an unbounded indicator. So it gives you, yes, the momentum of the move. However, it tells you the relative strength as well as the RSI. But the key difference with the CCI is that it gives you the pivot of the market. It tells you where the market will most likely pivot, where it'll pause, or where it'll change direction. So as we can see on the CCI oscillator has gone below its zero or center line. So we're trading around the -1 right now. So that tells me that there's a little bit of bearishness in the market. Not as strong as yet, but it's telling me to keep a heads up, because there's a potential that it'll reverse and change course. Now, below the CCI, we have what you call the momentum squeeze, which is also an oscillator, but it gives you it shows you the momentum of the move, and it tells you where the market will most likely or potentially change direction. As we can see in the past, if we look to our left on the histogram here on the momentum squeeze, we see that, okay, price action had traded below the 8 period EMA in this area and below the 20 period moving average, and it came all the way down, and we can see that on the oscillator it shows that it's in bright red. So whenever we see the bright red, we know that there is a strong selling pressure to the downside. However, when we continue on, the market paused, or it changed direction, and the CCI shows in this area that, okay, there's a strong probability that there's going to be a change in direction. And sure enough, it traded back up into the 8 period EMA and back into the 20 period moving average. And if you were going to enter a trade, this would be the ideal spot to do so, because as we can see, price had traded above, went back above the 20 period moving average, right? And what's more important is that as price started to trend, it stayed above the 8 period EMA. Now, a little bit about the 8 period EMA. Now, the 8 period EMA is like your regular moving average. However, it tells you the history of the last 8 candles, the closing, and also it gives you that emphasis on what is going on right now. So the cool thing about the 8 period EMA is that it is an exponential moving average, where it gives you the history of the past 8 candles, but it gives you an emphasis on what's going on right now. So as far as price action is concerned, it respects the heck out of the 8 period EMA. So that being said, let's go down to the 30-minute chart and see how it looks. Same scenario, right? So as we can see, the 8 period EMA has crossed over the 20 period moving average. And as we can see, price action has closed below both the 20, the blue line, and the 8 period EMA. So this gives us a signal that for the interim, that the probability to the downside is very strong. We see that the CCI is touching that negative 100 line. So whenever we see this, guys, we prepare ourselves to either stay out in the markets if we are bullish, but if we're bearish, what we do, we align ourselves with the trend of the market. So this is telling me right now that the trend may change direction short term, or it'll pivot, and we have here a market change in direction altogether. All right, so on the lower time frame, now that we have that established, all right, so normally what I'll do on the right hand side, I'll keep the 5 minute chart on, right? So it's the same chart, but different time frame. So we have the 30-minute chart on the left side, and we have the 5 minute chart on the right. So what I'll do is compare both charts relative to its moving averages. So on the 5 minute chart, price action is trading below the 20, and I believe is trying to go below the 8 period EMA. We're not sure as yet, but what looks really good right now is that price action is below its relative 200 period moving average, the white line, and it is trading below the 20, and it's flirting with or trying to fight the 8 period EMA. So this is a good trade setup if I were to enter a sell contract in this area, right? So normally what I'll do is I'll wait until the candle closes below the 20 or the 8 period EMA. All right, so the first thing, what I'll do now is just sit, and I'll just wait and be patient and see if price will continue in a down direction, right? Because we see the strong selling pressure on the 30-minute chart. So essentially what we're doing, we're trying to time our entries on when to enter this market. So As far as the uh, the sentiment is concerned, I'm convinced that we have some kind of a selling pressure. Why? Because we're looking at the 20 period moving average, and as you can see, guys, it's pointed down at a 45-degree angle. Now, this is one indication that the bears are definitely stepping in. All right, so if I were to trade this market, I would enter, for example, in this area. All right, and I would put my stop loss right above the 20, above the structure. All right, so if I were to if the market were to go above the structure, above the 8 period EMA, above the 20, above the 200, and hit my stops, so be it. This is what we call managing our accounts, right? So there's always opportunities to trade again. So never take it personal if the markets don't go in our favor. There's always another trade. The thing is that we're not trying to just predict where the market is going. What we're doing is making a statement. We're saying that, okay, the markets most likely won't go in a certain direction. So based on what we see, what we're saying to ourselves, the market will most likely not go above a certain area or above a certain moving average, or it won't go above the 8 period EMA on the 30-minute chart, or it won't go above the 20 period moving average, because the 20 period moving average and the 8 period EMA, they both behave as a strong resistance to price action. So what we're looking at is a form of support and resistance, guys. All right, so the resistance right now is looking pretty strong. So whenever we see the moving averages that are pointing at almost a 45-degree angle, this tells me that there is some strength to them. So we see the angle of the 8 period EMA. We see the angle of the 20 period moving average, and of course the 20 period moving average is the 200 period moving average is almost horizontal, right? So it's kind of sort of pointing up, which tells me, all right, there's a possibility that the move to the downside, even though there's a strong move, there's a probability that eventually at some point in the future, not right now, that it'll pivot and turn and close above the 200 moving average, the white line, but not right now, right? So if we were to scalp, this is where you would enter, right? You would enter right in this vicinity right here, because as long as price is below the 8 period EMA, that is what we want to see. That means that we have a an opportunity to either add to our position, or we stay in the trade. So no matter what happens, so our first defense, our first line of defense would be the 8 period EMA. So as long as price is trading below the 8 period EMA, I'm happy, right? That's what we want to see. Now, as this continues, as the trade continues, what we would do normally, ideally, is to take off or scale out of our position, right? So as the um, the candlesticks progress downwards, we would move our stop loss right above the previous candle. So we would put our stop loss somewhere either here, or we can put our stop loss right above the the spike of that blue candle, the one that closed. But we want to lock in our position. So I'm convinced, and I'm pretty confident that the price will continue off down. However, if it doesn't, if it comes back up, we will just lock in the profits between here and the our entry line, which is right here. So essentially, that's all there is to it, guys. As long as price action stays below the 8 period EMA, we are very happy. All right, we're ecstatic. All right, so the 8 period EMA is so powerful, guys. I mean, a lot of traders, even on social media, you don't hear too much about the 8 period EMA, but that is what we call the trigger line. The trigger line is the 8 period EMA. That's where we trigger our entries, and that's where we trigger our stops. So yes, we could take off half. Let's say, for example, that the price had, for example, returned back up in this area right here. Then if it broke past the red line, we would say, all right, we could take off half, and we'll see what happens if it hits the blue line, which is the 20 period moving average. Now, what I want to see if I were to do that is that the price action would continue to stay below that blue line. But in my case, when I trade, whenever I see the 8 period EMA is being compromised, I'm going to get out. All right, because I know that at some other time that there'll be another opportunity. And that's the beautiful thing about the markets, guys. There's always opportunities no matter what. So if you miss one trade, it's no big deal. Don't take it personal. If you get stopped out, don't take it personal. It's just the way of the markets. But this form of trading, in my opinion, in my professional opinion, it takes away all of the anxiety of trading, the fear of missing out, not knowing when to enter or to exit. All right, it takes away all those anxious feelings when you trade. So it's a beautiful thing when the trade goes in your direction, and it's a beautiful thing if it don't, because you know that the 8 period EMA and the 200 moving average and the 20 moving average are very, very effective when it comes to timing your entries and exiting the market and entering your position. All right, so we will continue with part two. We'll go in more detail in the next video. We're going to be talking more about the CCIs. We're going to be talking more about the momentum squeeze. And again, this chart is from Trading View. So this is where I do all my trading analysis. This is where I do my demo trades before I enter into the real markets, or this is where I do my test trades. So Trading View is beautiful because there's so much different types of indicators that you can use. But as far as trading, in my opinion, you really don't need that many indicators. You just need a few key things. And one of the most important things for me is that 8 period EMA. If there was nothing else, guys, if I had nothing else besides the 20 period moving average, the blue line, and the 8 period EMA, that would be okay, because it's helped me so much, not just as a professional trader, but in my trading journey these past couple of years. It's just really amazing. So, yes, try it out. Try the CCI and the momentum squeeze by LZB, I believe, on the platform, which is TradingView. I highly recommend it. Guys, that's it for now. I thank you for your time, and please trade with confidence. And remember, there's always opportunities in the markets. My name is Ovi. Thanks for listening to me, and please like and subscribe whenever you can. Okay? All right, guys, that's it for now. Have a good, beautiful rest of the day. Bye bye.